There are two major points that I continue to come back to on the channel time and time again. The first being that 2022 is going to be a volatile year. We're going to see some pumps, we're going to see some dumps, people are going to get caught out, and most will miss the parabolic moves that are waiting to happen. The second being we're going to see some massive opportunity in 2022 to invest in things like cryptocurrency and, of course, real estate as well. The overall thesis of the channel for regular viewers, you'd know, is we are looking at an 18.6 year cycle, which is due to peak sometime around 2026, and then followed by a massive crash. Now, I'm not a doomsdayer. I do think we've got a lot more upside to happen, even with some of the crazy stuff going on in the world. Eventually, all of the stuff will come to a peak, and that tends to happen once we see a ton of credit being created from the banks, not the money printing. And of course, everyone being absolute degens in the market, buying up everything that they can. Unfortunately, this happens time and time again, and why 99% of investors, whether it's cryptocurrency or real estate, will miss out on the opportunities. They're too scared and too bored to be with the market in the opportune times, and they're too hyped up or drunk on the hopium near the tops of the market. You guys would have seen this firsthand in 2021 if you stuck through the cryptocurrency market, the booms and the busts, which led to most retail investors just getting absolutely wiped out and leaving the market. This doesn't change between markets. This doesn't change between crypto and stocks and real estate. It's human psychology. It happens time and time and time again, and it will continue to happen throughout history until something fundamentally changes within humans. With that in mind, let's update some of the massive news on cryptocurrency and, of course, in real estate as well. Make sure you've liked and subscribed. I know you hate hearing me ask for it, but it really does help the channel out as well. And of course, you can check out the links to SwiftX for the Aussies and Bybit $4,000 Ethereum giveaway. Plus, there's a free newsletter down there from yours truly. Let's dive in. The market sentiment for cryptocurrency is finally back to neutral. We're sitting around 51. Yesterday was 47. And we're probably expecting this because crypto or Bitcoin has started to reach some of those previous high levels at around that $44,000 to $45,000. You can see today we're sitting at $44,400 and we just reached a recent peak of $45,000. So on the macro view, I'm still seeing this as a trading range, basically going between $30,000 and about $65,000. This is just for Bitcoin. Now, if we started to break down from these levels, then I would consider that we would take a little more time to accumulate and move to higher prices. But 99% of people will probably miss this because, as you've probably been aware of, this is pretty much one of the most boring times in cryptocurrency at the moment. The good news for the short term anyway, short term days to weeks, we're broken above 50%. We have 2 days to go until the weekly bar closes, and ideally want to get it above that $40,000 to $42,000 just looking at the recent ranges. Now, if we can get it above 46, then we're looking closer towards that 50 for that next attempt. The market, if it can get above those levels, likes to get vacuumed, magnetized towards that next higher price to test those levels. And like we've seen before, that's sitting around $50,000 to $52,000. One step at a time, not looking too bad for Bitcoin at this short term. Longer term, I'll leave a link to my 4-year cycle video for Bitcoin at the end of this video. I still think we'll see another major low. Now, I've seen the comments come through, well, it could be a higher low or a lower low. That's not the point. When you have done this for long enough, you'll understand that even if we get a move up and then a higher low, you've got an opportunity to enter. Maybe we get a rejection and then we start to see the market fall away from this point, and we might get a lower low than this level here. So it sounds like that I'm trying to cover all bases, but I am trying to cover all bases for my investing because no one knows exactly where this is going to be. But if we can manage to understand what we would do if the market goes to the next resistance, or if the market comes back and finds support at previous resistance, then we have a much better plan than just saying, I'm going to wait until I see the market crash to 20 grand. That tends to be the main thing I see on YouTube or Twitter, especially with new people into the market. It's like when the market or when the asset I'm looking for gets to this price, 20,000, 25,000, then I'll enter. it doesn't necessarily work like that, because you can miss out and then get sucked into the FOMO as the market rises up to the next resistance level. But if you can understand that, as if the market gets to that next resistance level, but it does it in a weak type of structure where it might hit that and fall back and fall underneath some of the previous highs, that's much weaker than hitting the resistance and staying up higher and starting to move on. But by that stage, the psychology tends to be, oh, well, I've missed out on that move. Let me go and look for other assets and start to gamble on other assets. So let's take a look at some of these macro and micro levels. Macro resistance is above at around that 50 odd K because it is sitting at that 50% level of the downtrend for Bitcoin. Now, I've got this as fair value because the market has been trending between 30K and mid $40,000. So the market is kind of happy at this level, even though we see short-term fear and greed between this level. But generally speaking, most of the last 12 months has been in this zone. Now, underneath this macro support, which is at 28K, you can see we had the support back in January 2021, and then again, May, June, July. I would see this as being undervalued. So anywhere that this market falls under, I'd be very keen to be buying up a lot of Bitcoin. And that could fall back to any of the previous support resistance levels. You just have to be ready to suck that up if the market does come back that far. So if you happen to buy at 28 or 24,000 and the market continues down to, who knows, 14,000 or 12,000, we just have to look at it as if this is all the undervalued area, and within a few years' time, it's not going to matter too much because the market will probably go higher yet again. Now, of course, that's the long-term view. If we hold that for Bitcoin, that Bitcoin will be up and to the right. So short term, we can get absolutely psyched out of our positions. Day to day, we see the market sentiment change. Last week was fear. Last month was extreme fear. Now it's neutral. But really, it's basically gone nowhere in that entire period of time. Yet the sentiment seems like it should be fearful and then greedy, and no one knows what they're doing. The big difficulty is deciphering which information, potentially news if you happen to be following that, is short-term analysis and which is going to help out in the long term. So the two are very different, and they have different effects on the market depending on what stage of the cycle we're in. The latest massive Bitcoin headlines that has been capturing the attention of new investors and maxis who love to froth on it is Russia could potentially accept Bitcoin for payment of oil and gas. But it's basically hypothetical and probably not going to happen, especially considering that Russia would want to increase the value of their ruble as it's been down 25% over the last few weeks after them invading Ukraine. So I think their sights are more set on increasing the value of their currency so that their people obviously have some currency to work with rather than selling off rubles for things like gold, which is also happening, rather than letting other countries pay in Bitcoin. But hypothetically speaking, it is possible. The world's largest asset manager is exploring how to serve clients with digital currencies. This is coming from the CEO, Larry Fink of BlackRock. They manage $10 trillion. That's T, not just the B's, but they have $10 trillion. So they're planning to offer crypto trading services to its investor clients. Digital currencies can also help bring down costs of cross-border payments. For example, when expatriate workers send earnings back to their families, he added. So this is coming from the CEO himself. Just last year in July, Fink said in an interview that he is not seeing much demand for digital assets. That, of course, was July. We're nearly 12 months later, and they're looking to start to include this for their clients. So personally, I see this as massive news, but this is going to take time, just like everything else with adoption and development. Along with BlackRock, Goldman Sachs surveys show 60% of surveyed clients expect to increase crypto holdings. They surveyed only 172 clients, but news is news, right? On their attitudes towards digital assets, 60% of this 172 expect to increase their digital asset holdings in the next 1 to 2 years. ExxonMobil running pilot project to supply flared gas for Bitcoin mining. Essentially, they're going to use some of their old gas, their waste gas, which would essentially be burnt off, but they're trying to get this to power Bitcoin mining operations. The excess natural gas would have otherwise been burnt off or flared because of the lack of pipelines. This wasted electricity or wasted gas power is often still counted towards Bitcoin's energy consumption, even though it would have just gone off and been burnt anyway. So Bitcoin is actually making use of energy which wouldn't normally be used and just been burnt off. ETH staking yields are likely to be in the range of 10 to 15% following the Ethereum 2.0 upgrade. So we covered this in yesterday's video, looking at 2.0 to come out sometime in the coming months, probably late Q2, maybe Q3. That's what the news and the reports are heading towards. So we'll just see. Obviously, we've been dragged through the mud for the last couple of years with the upgrade to Ethereum. So if it doesn't happen, doesn't happen. I don't think it's going to be affecting too many people because we're kind of expecting this. But if it does happen, then we're looking towards somewhere around 10 to 15% staking rewards for ETH following the upgrade to ETH 2.0. And yes, I know it's not ETH 2.0, it's consensus layer, but at the end of the day, same, it's an upgrade. Now to some big real estate and crypto news. Figure sets out plans to launch crypto-backed mortgages. So we can be using our cryptocurrency to go and buy property. And I think this is going to then boom the market even further in the coming years. So I'm looking here again at macro, somewhere between 3 and 5 years for this real estate cycle to come to a peak. Not looking day to day. And of course, this year looks like a pretty good opportunity as the prices are down. We had interest rate rises. People are fearful of what's coming next in the market. But personally, and the way I'm investing is definitely looking at some real estate. And I think these sorts of things are what will continue to spur the prices of real estate up further later in the cycle, because it makes it easier for people to use their credit to then go and throw that into land. I'm interested to hear from you guys. What would you be doing with your crypto profits? If you could get it to a point that could potentially buy a property outright or even hold enough for a deposit, would you be looking to cash out of crypto and get it into something physical for yourself to secure your future and the future of your family? Is that what a lot of people are looking to do with crypto, is to potentially buy some property? Good to note that Figure says it won't rehypothecate the assets. So what does rehypothecate mean? Essentially, it's a practice whereby banks and brokers use for their own purposes assets that have been posted as collateral to their clients. So essentially, if we give them $10 million and they give us $5 million back to go and purchase a property, they're not going to then go and use that $10 million to go and invest in other assets. It's basically going to sit at the bank, or in this case at Figure. So at least that's not going back into the market over and over and over again to boom, as we talked about in the intro, the real estate cycle, and obviously continue to create credit on top of credit on top of credit. But that can change at a drop of a hat. If Figure choose to change the rules and how they use the collateral, then of course we'll have to continue to follow up to see what they tend to do with that cash. Thank you to all of my regular viewers who show up day after day, hitting that like button and sharing the content with a friend. If you are new here, hit that subscribe button and check out the links in the top of the description for our free newsletter, Patreon, and Bybit $4,000 Ethereum giveaway. 5 more days to enter that, exclusive to the Investor Accelerator. Thanks once again, guys. See you at the next one. Until then, have more fun to get more done.